Welcome to our channel with new episode. For nearly 2 centuries, John Deere has been more than just a company. It has been a symbol of stability for farmers, families, and entire communities across the Midwest. However, recent changes behind closed doors have sent shockwaves through the U.S. farming industry. What was once a proud brand known for its green paint, yellow wheels, and strong American roots now faces uncertainty. Small towns are preparing for the worst, workers are losing their jobs without warning, and a single decision made in a corporate boardroom might alter the future of farming forever. The question is, why is this happening now? Who will benefit from these changes, and who will suffer the most? What is unfolding isn't just about tractors, it's about trust, transformation, and a decision that could change the rural landscape of America permanently. John Deere has been a cornerstone of American agriculture since 1837 when blacksmith John Deere invented a revolutionary polished steel plow that made farming in the tough Midwestern soil much easier. From its humble beginnings in Grand Detour, Illinois, the company grew into one of the most well-known and respected names in the agricultural industry. Over time, its green and yellow logo became more than just a mark of quality machinery. It became a symbol of hard work, innovation, and the enduring spirit of rural America. Throughout the 20th century, John Deere expanded rapidly, cementing its role in rural communities not just as a provider of farming equipment but as a cultural icon. Its manufacturing plants in states like Iowa and Illinois provided stable jobs and boosted local economies. Generations of families worked for the company, forming a deep emotional bond between the workers and the brand. The company's dominance in the industry wasn't just due to its superior engineering, it was also built on a commitment to American manufacturing. Unlike many other corporations that moved production overseas, John Deere kept its operations largely within the U.S., reinforcing its strong national identity and earning unwavering loyalty from farmers who trusted its commitment to quality. By 2025, however, cracks started to appear in this once unshakable image. A shift in corporate strategy began to raise questions about whether John Deere still upheld the values it had long been known for. While its history remained respected, the company now faced the harsh realities of corporate restructuring and globalization. For many, the concern wasn't just about what John Deere had built, it was about whether the company could stay true to its original mission and values. A major warning came when Deere and Company expressed concerns that new trade tariffs could disrupt the fragile recovery of the U.S. farm economy. After years of struggling with low commodity prices and rising interest rates, American agriculture was beginning to rebound. However, John Deere executives cautioned that looming trade policies, particularly tariffs on steel, aluminum, and other retaliatory measures, could threaten this progress. CEO John May emphasized the company's focus on optimizing inventory and adapting to market conditions, but uncertainties remained. John Deere's 2025 financial projections estimated net income between $5 billion and $5.5 billion. However, these figures did not account for potential tariffs proposed by former President Donald Trump. If implemented, these tariffs could drastically increase production costs, making it harder for farmers to afford new equipment. Industry experts noted that the dealership network and corporate leadership would need time to adjust to a slower agricultural economy. Farmers, already facing financial struggles, might suffer the most from changing trade policies. Some John Deere officials dismissed China's new tariffs on U.S. agricultural equipment as insignificant, but broader trade tensions raised concerns about machinery exports and rising raw material prices. A 25% tariff on imported steel could drive up manufacturing costs, which would likely be passed down to farmers. Despite these challenges, Deere remained hopeful about some positive developments. Used equipment inventories were decreasing, thanks to strategic production cuts, and higher corn prices were giving farmers more confidence to invest. First quarter net income for 2025 reached $869 million, surpassing expectations. The company also continued investing in advanced technology, such as autonomous machinery and satellite connectivity, to enhance productivity in rural areas. However, without clear policies on tariffs, the agricultural recovery remained uncertain. One of the most controversial moves by John Deere was its decision to shift more manufacturing operations to Mexico. This decision sparked outrage among American workers, many of whom viewed it as a betrayal. What started as a strategic business decision in 2023 soon led to widespread job losses across the Midwest. In just 1 year, John Deere announced layoffs affecting hundreds of workers in cities like Waterloo, Ankeny, Ottumwa, and East Moline. More job cuts were expected in the coming months. Workers expressed their frustration, claiming the layoffs were driven purely by corporate greed. Many pointed to the company's record-breaking profits, over $10 billion in 2023, and its spending of $7.2 billion on stock buybacks. CEO John May received $26.7 million in total compensation, while shareholders collected $1.4 billion in dividends. Critics argued that Deere's real motivation for moving to Mexico was to take advantage of cheaper labor and lower production costs. Employees who had worked for the company for decades felt abandoned, with some choosing early retirement rather than facing an uncertain future. The frustration among workers was made worse by the way these layoffs were being handled. Many employees felt that management was deliberately withholding information, avoiding traditional communication channels, and hiding upcoming layoffs until production goals were met. This secrecy created an atmosphere of fear and distrust in the workplace. Employees in Iowa and Illinois reported that morale had plummeted, and the slow, unpredictable nature of the layoffs only added to their anxiety. Despite repeated requests for clarification, John Deere remained silent on the matter. However, leaked internal documents suggested that the company was planning even more job cuts and relocations. By 2026, John Deere planned to move the production of skid steer and compact track loaders from Dubuque, Iowa, to Mexico. This followed an earlier decision in 2022 to shift cab manufacturing out of another Iowa facility. John Deere executives justified these moves as necessary for global competitiveness. However, critics saw this as an excuse to cut costs at the expense of American workers. Employees weren't just losing their jobs, they felt betrayed by a company they had dedicated their lives to. Instead of being let go due to financial struggles, many believed they were discarded in favor of cost-cutting measures dictated by spreadsheets. The economic impact of John Deere's offshoring strategy was felt across the Midwest. Towns that once thrived thanks to the company's presence, such as Waterloo, Ottumwa, Dubuque, and Moline, were now facing a dual crisis: job losses and declining local businesses. The company's first quarter earnings report for 2025 only reinforced these fears, showing a 50% drop in net income and a 30% decline in net sales compared to the previous year. The damage wasn't just about layoffs, it was about entire communities struggling to survive. Local business owners in Waterloo noticed fewer customers coming in, while longtime residents talked about leaving town to find work elsewhere. In Ottumwa, over 100 workers accepted early retirement packages, fearing deeper cuts in the future. Many worried that if John Deere continued downsizing, their towns would lose a vital economic foundation. Banks in the region reported rising concerns about loan defaults, while commercial landlords saw small businesses shutting down. In Moline, city officials noted declining tax revenues, and local school districts paused improvement projects due to concerns over future funding. Despite the hardships facing American communities, John Deere continued scaling back its U.S. operations, signaling that more changes were on the horizon. In February 2025, John Deere reported a sharp decline in sales across its major divisions. The Production and Precision Agriculture division saw a massive 37% drop compared to the previous year, while the Small Agriculture and Turf division fell by 28%. Dealers have been cutting back on orders, and local suppliers who rely on Deere contracts are bracing for layoffs. The situation has worsened because farmers, struggling with lower crop incomes and rising interest rates, are delaying machinery purchases or opting to rent instead. This led to a shocking 35% drop in Deere's revenue for the quarter, far below analysts' expectations. During a financial call, CFO Joshua Jepson emphasized the company's focus on understanding how new tariff policies could affect their customers. Concerns over ongoing tariffs from the Trump administration, particularly on China, Canada, and Mexico, have made the agricultural outlook uncertain. Prices of essential materials like steel and aluminum have also surged due to high import tariffs, increasing production costs and squeezing profit margins. The impact of Deere's struggles extends far beyond the company itself. An economic development official in Illinois described the situation as a domino effect. When Deere cuts back, it's not just employees who suffer, it affects local businesses, from machine part suppliers to small restaurants and stores. More than just an economic hit, the crisis is deeply personal for many communities. John Deere has been a part of their identity, with its green and yellow logo appearing on youth sports uniforms, parades, and community centers. Now, many feel abandoned. A laid-off employee from the Dubuque plant expressed frustration, stating, "It's not just about losing jobs, it's that no one is talking to us. There's no plan, no communication, no answers." As of March 2025, Deere has yet to announce any major recovery efforts, leaving local officials to manage the economic fallout with little support. People are now wondering not just if Deere can save itself, but whether these communities will ever recover from losing a company they once considered their own. When John Deere announced it was shifting production to Mexico, the backlash was immediate and widespread. Workers, farmers, and longtime customers saw this as a betrayal of American manufacturing and rural values. The hashtag #BoycottDeere trended across social media in early 2024, with former employees and loyal customers voicing their anger. Protests broke out in several Midwestern towns, and labor unions accused the company of putting profits ahead of people, especially since Deere had recently reported record-breaking financial gains. The controversy quickly drew attention from politicians on both sides. Governors from states like Iowa, Illinois, and Wisconsin publicly criticized Deere's decision, warning that it would devastate regional economies. In Congress, lawmakers proposed reforms to penalize companies that outsource jobs while offering new incentives for businesses that manufacture in the U.S. Some saw these efforts as symbolic, while others believed they marked the start of a stronger push against corporate offshoring. The issue became part of a larger national debate about the future of American manufacturing. In January 2025, lawmakers introduced the American Workforce Retention Act, which aimed to tie government subsidies to job retention in the U.S. Though not yet passed, the bill signaled growing frustration with companies that benefit from public funds while shifting jobs overseas. Deere, which has received agricultural incentives, is now under scrutiny regarding its continued eligibility for such programs. Internal documents leaked in February 2025 revealed that Deere executives had anticipated the backlash but proceeded anyway, considering it a manageable reputational risk. This only fueled public outrage, intensifying demands for corporate accountability. Now, Deere faces not only financial struggles but also a growing political movement determined to hold it accountable for its decisions. For the thousands of workers laid off by John Deere, the consequences have been deeply personal. Matthew Schiltz and his wife, both employees at the Davenport Works facility, were laid off on the same day. Matthew described the emotional weight of the situation, explaining how proud he once was to work for Deere only to now feel betrayed. The couple is now facing severe financial stress, worrying about rent, car payments, and daily expenses. Beyond financial struggles, the layoffs have taken an emotional toll. Many former workers feel undervalued, especially those who had been with the company for decades. One employee, who worked at Deere for 20 years, expressed frustration that the company seemed to prioritize short-term profits over its experienced workforce. The effects extend beyond individual families. Local businesses that once thrived thanks to John Deere employees are now struggling. Families that were once financially secure now face hardship, struggling to cover basic needs with limited job opportunities. This economic ripple effect is reshaping entire communities. Despite these challenges, many laid-off employees are trying to adapt. Some are taking temporary jobs, while others are retraining for new careers or returning to school. Community support networks have formed to provide food, job assistance, and emotional support. While they are facing tremendous difficulties, these workers are standing together, trying to rebuild their lives in the absence of support from their former employer. As John Deere faces growing backlash, its competitors see an opportunity. Farmers frustrated with rising equipment costs, poor customer service, and layoffs are reconsidering their loyalty to the brand. Competitors like Kubota, CNH Industrial, which owns Case IH and New Holland, and Caterpillar are stepping in aggressively. They are expanding dealer networks, offering better financing options, and positioning themselves as more customer-friendly alternatives. Kubota, known for its simple and affordable equipment, has been expanding its presence in the US, appealing to farmers who feel abandoned by Deere's push toward automation and proprietary technology. CNH Industrial, meanwhile, has avoided the controversy surrounding outsourcing and is actively promoting its commitment to North American manufacturing. Caterpillar, traditionally known for construction equipment, is now making moves into the agricultural sector, offering durable machines and strong after-sales support. While Deere struggles to repair its image, these competitors are not just taking advantage of the moment, they are reshaping the agricultural equipment industry for the future. John Deere has made massive investments in automation, believing that AI-powered technology is the future of farming. The company has spent billions on autonomous tractors, drone crop monitoring, and precision planting systems. It recently introduced an upgraded version of its autonomous 8R tractor, expected to roll out widely by 2026. Executives argue that automation will help farmers work more efficiently, reduce labor costs, and make agriculture more sustainable. However, not everyone is on board. Many small to mid-size farmers in the Midwest feel that Deere is pushing technology on them without offering adequate training, affordability, or support. The company's restrictive repair policies and proprietary software have also sparked criticism. Some farmers believe Deere is moving away from being a partner to becoming a corporate gatekeeper, limiting their ability to maintain their own equipment. Moreover, the shift toward automation raises concerns about job losses. Some former Deere employees have pointed out the irony of the company investing in robots while laying off thousands of workers. While Deere argues that automation is essential for the future, the backlash may undermine its ability to sell that vision to a skeptical customer base. For decades, John Deere was built on trust, loyalty, and a deep connection to American farmers. That trust is now at risk. Outsourcing manufacturing, laying off workers, and prioritizing profits over people have created a crisis of confidence. Many farmers no longer see Deere as a company that represents their values. The company's reputation is suffering in measurable ways. Sales have slowed, dealers are seeing less demand, and competitors are winning over former Deere customers. Some farmers say their issue isn't with the quality of the equipment, it's with the company's values. As one Iowa farmer put it, "I didn't stop trusting Deere because they made bad tractors. I stopped trusting them because they stopped building for us." If Deere wants to recover, it must take significant action. Restoring jobs in the US, improving customer service, and rebuilding relationships with farmers and local communities could help mend its damaged reputation. If it fails to act, the consequences could extend far beyond temporary financial losses. The company risks permanently losing the trust of the people who built its legacy. Thanks for watching. Keep it and stay tuned for more interesting episodes. Like and subscribe our channel. Have a good day.